All right. Hey, everybody. I'm here with Jenny Farrell, someone that I have a pretty long professional experience with for my real estate investment. Everybody, thank you for making the time to, sorry, thank you for making time to be on this call. I got something in my throat, so I'm going to let Jenny take it away. Jenny, would you like to introduce yourself?
Sure, sure. Hi, my name is Jenny Farrell. I'm with the Romano team at Thrive Mortgage. I have been in the mortgage business for about 22 years. I hate
Oh,
to even
wow.
say that, sounds so
Yeah.
long. uh,
hmm
I'm in the mortgage world, that's for
Yeah, I
um,
gotcha. Yeah. I just want to thank you. I mean, hey, the experience is awesome. That means you're going to be really helpful for our group here, and anybody else that sees this on YouTube. I would be surprised if there's a lot of YouTube viewers, but maybe.
maybe.
Hey, so
I did forget to say I am also the president of the Dayton Mortgage Bankers Association for this year for 2022. So I'll just
oh
throw
wow,
that little plug in for the
yeah.
Dayton Mortgage Bankers Association.
Hey,
Yes.
congratulations. When did you hear about that?
I started as president this year in January.
Awesome, sweet. So,
So
hey, I mean, I was like, hey, we got someone on this call that knows what they're talking about. And then you just exceeded that, so you really know what you're talking about. That's great. So, hey, thank you so much for the introduction. It's fair to say you're a mortgage professional. And so, of course, for anyone that wants to real estate invest, we don't have unlimited sums of cash. And a huge part of real estate investment is, having access to capital and mortgages. So, how would you describe to anybody that's on this call the differences between a standard, like a primary residence mortgage, or versus an investment mortgage?
um, the biggest difference I would say between a standard conventional mortgage and an investment property are going to be loan to value, so LTVs as we call them, loan to values, and the the rates or the points you might pay for a rate for a conventional loan. Um, and say, for instance, in a conventional loan of a primary residence, you could put down as little as 5%. But
hmm
on an investment property, the least amount that you could put down would be 15% to be at an
hmm
85% loan to value. And that would be for a one unit property.
hmm
Uh, terms are going to come when you put more terms, meaning and how many points you're going to pay to get. And one more 2 to 4 amount down would be on a mortgage.
Of course. Yeah, and I mean that's super awesome. And so when it comes to investment mortgages, is the process of receiving an investment mortgage any different than just a primary residence mortgage?
Um, not really. It's the only way that it would be a little bit different. There's really, I would say, like I said, no difference. Um, the only difference would be so say I'm working with an investor that has multiple properties. He's already got 5 properties. So then we have to get tax returns for sure. And then we would have to also it's a little bit more cumbersome, I should say, because we've got to figure out each property. Do they have HOA dues? What are the taxes? Is there a mortgage on it? So it could be a little more cumbersome, but
hmm
it is basically the same process to go through that if we're talking a conventional mortgage.
Of course. And I mean, that keeps it super simple, especially for the people on this call that already have an invest or already have a primary residence mortgage. I feel like the term investment mortgage is really scary and it scares people away and it just adds that psychological barrier that we might obtain. And as someone who just went through this, I actually thought my primary residence mortgage was way more difficult. Um, so yeah. So just about everybody that I'm gonna force to watch this video qualifies for VA home loans. Is it common practice that people can use a VA home loan to begin their real estate investment journey?
The only way that they could do that to use a VA loan for a home investment journey would be they would have to live in that property.
Hmm.
for 6 months to a year first. So you
Hmm.
could live, you could purchase as a primary residence, live in the property, and then when you convert it to an investment property, you would then get a new loan. You can use a second time use. Now, I don't know how the VA would look at that though,
Hmm.
having two primary residence, primary residence loans through them.
Yeah. So actually, to answer that question for the people on that I'm going to force to watch this video, our orders don't allow us to have a PCS VA loan. So
Okay.
you can take out a VA home loan for a primary residence, like I just did, as you're
Hmm.
familiar. And
Yes.
depending on the kind of orders that you receive, so let's say we go to Afghanistan, or we get mobilized to Fort Bliss or whatever, there are certain types of orders that allow you to take out another VA home loan if you're going to be going to a separate place. So for us, because
Okay.
we're returning
Okay.
back to Ohio, we don't get to take out that second VA home loan. And for anybody that I'm forcing to watch this video, if you have any questions, I can answer that offline. So,
And one thing about that, if someone is pretty young starting this, I don't know if the people that you're talking to are pretty young in the first investment properties, but
mhm,
one way to kind of start as an investor would be to buy a double or a fourplex and live
mhm,
with an FHA loan. So you could put down the minimum amount of 3.5%, live in the property, and then when you're ready to move on to buy another property, you would need to get a conventional loan, but you can count those rents that you've been getting to help you qualify for your next mortgage.
hey, that's actually super important. So for real estate investment, your in order to receive other loans, of course, you have to be able to prove income. You can count, so what you just said, and you can correct me if I'm wrong, you can count your rental income as income for other mortgages.
Correct. But you need to claim it on your taxes.
Hmm.
And obviously, if you haven't had a property for taxes yet, so then we would actually use a rental, but you would, I'm sorry, I just lost my train of thought.
You're totally fine. You're totally fine.
You can use the rental income to help you qualify. So let's say you do have a fourplex that you've been living in and you're getting ready to use to move to a new house. So you've got those three others that have been paying you rent for the last year. You can
Hmm.
use that towards your income to help offset that payment that you're making on the original mortgage.
Yeah, that and that's super awesome. Everybody that I'm forcing to watch this video, that's actually something that Jenny helped me accomplish on the house I just closed on. Of course, I mean it's a pretty inexpensive home, so I can't imagine it would have been difficult, but to actually obtain that loan. But it is what it is. So it's still important. It can help other people out. So
Right.
I feel like this is a hot button topic right now. Interest rates. So
Whew.
interest rates right now, I mean, I just closed at 4.85. My primary residence is at 3.25. Do interest rates really matter, you think, when it comes to real estate investment loans? Or do you think it's
Well,
just the collection, like the actual property itself, as in cash flow, uh, equity, all of that?
Well, and that's exactly what I was going to say. I would say no, they don't matter that much, because you're going to be collecting rent. Now,
Hmm.
to a degree, they will, because the lower your payment, the better your cash flow is going to be.
Hmm.
But in this atmosphere or market that we're in right now, rents are going to be higher, and rents, you can raise the rent because there's demand out there for rental properties. So if your rates are higher, and which makes your payments higher, then you would just need to raise your rents to cover that.
Of
So
course.
they
Yeah.
do a little bit, but is it a end all be all? I don't think so.
Yeah. And the way that I describe this, and I have been describing this to some of the people on this call, is when it comes to a real estate investment, I just cannot foresee any circumstance where a 1% interest rate is going to make or break your profit. And if it is, it's probably not a good deal in the first place. And,
Right.
when it comes to real estate investment, you have equity buildup, you have appreciation, you should have cash flow. I would hope so. And,
Yes.
when I was crunching my numbers on the house that I just closed on, a 1% difference in my interest rate was just like what, $20 per month. That
Yeah.
shouldn't matter. You shouldn't be cash flowing $20 per month. You should be cash flowing like 100, 200, however much it is. So
Yes.
so when it comes to real estate investment loans, just to clarify, you have said that the interest rates are of course higher, and I'm sure that's because it's more risky for you guys.
Yes. Yes. And investment property is more risky to a lender because obviously, if you start having problems, you're going to make sure you pay for the house that you live in so you have somewhere to live. That's your first priority. Your
Hmm.
investment properties are not going to be your first priority. So it is a little riskier.
Hmm. So
Absolutely.
generally speaking, and of course, you've been in this industry for a hot minute, and you're super awesome. You're the president of the Dayton Mortgage Investor, or the Dayton thing. Um,
Mortgage bankers.
yeah, yeah. So how much higher would you ballpark estimate a real estate investment mortgage would be versus a primary mortgage?
It's kind of hard to say because it is going to depend on someone's credit a little bit.
Hmm.
It's also, you're definitely right now going to pay points for your rate in an investment property.
Hmm.
So I would say it's probably going to be about a point higher than a normal. And again, that's going to depend on, are you putting 15% down or are you putting 25% down? So
Hmm.
all those things kind of go into play when you talk about the rates.
Of course. I gotcha. And I mean that's just that's a pretty introductory level question, but of course it helps to ask these questions for people. So
Yes.
let's talk about Thrive Mortgage. So interesting enough, a person on this call actually works at JP Morgan Chase.
Okay.
So yeah, one of my friends here works at JP Morgan Chase. So how would you compare a company like Thrive Mortgage to a place like JP Morgan Chase, and what kinds of services can you guys help with and specialize in?
Well, we are a mortgage company. We are not a bank. So
Hmm.
that's what we do is just mortgages. JP Chase is a bank. That's their primary their primary income is their bank. We are a mortgage company. We have a direct line with Fannie Mae, Freddie Mac. Fannie has us testing something that has only been thrown out to maybe a handful of lenders in the United States to test. So
Hmm.
we have the direct, with them. And again, we're a mortgage company, not a bank. So that's what we thrive on. And we have what are called non-QM products that
Hmm.
the specific one that can help investors also.
I gotcha.
Um,
Um, and so for anybody on this call, to give you guys an example of the advantages that I have actually received from investing with Thrive Mortgage, when it came to the underwriting for my primary residency loan, the Thrive team was able to look and take a deep dive into the VA loan laws that allowed me to take out a VA primary residence loan at the beginning of this mobilization because they were actually able to do the deep digging and research into the laws themselves. And they were able to allow me to purchase a primary residence while I'm here and still rent it out. Of course, I am returning to that primary residence once I come back, but that's the kind of thing, and from personal experience, I was not able to receive that kind of mortgage treatment from JP Morgan Chase, Veterans United, and a bunch of other lenders. Rocket Mortgage even denied me, which is insane. So, I mean, that's an advantage. And do you have any examples like that of things that you guys have done for investors in the past?
oh gosh, let's see. Now you're putting me on the spot here.
I'm sorry. Hey, we can come back to it if you want.
Let me try to think. But yes, I know we've gotten things through when, like you calling, when you and I first talked, and we
Hmm.
were able to figure out your solution. We have had more than that, more than one of those kind of instances where we are figuring something out because someone else may not want to take that deep dive into looking at the guidelines.
Yeah,
So we
and
try to certainly do that with our customers.
yeah, and you guys specialize in mortgages, and for me, I think that that's an awesome thing, especially for real estate investment. Whereas JP Morgan Chase, like I love my JP Morgan Chase credit card. It's fantastic. I get a lot of free travel with it, and it's great. But do I want that person to underwrite my mortgage? Maybe not. And of course, with real estate investment, you might not understand these benefits uh, right away. It takes a lot of experience, and I'm grateful that my primary residence was so difficult to get because I learned so much. Um,
Yeah.
of
And
course.
one thing I do want to say again about the Thrive Mortgage and the non-QM, which I just mentioned, is that's one of our programs. Like, so that makes us different is we have this non-QM program, and for an investor, and it's an investment loan only, um, it's a 15% down. You only, as long as you qualify with the rent payment, so they don't need to look at other things. As
Hmm.
long as the rent qualifies you for the mortgage, then you can get the mortgage. So those kind of products, and when you're talking about this, and an investor that owns over 10 properties, or 9, 10 properties, cannot get a conventional loan on a investment property. So this non-QM product would also help with something like that for a savvy investor who already has 10 mortgages on 10 property,
Hmm.
and needs to find a way to finance another. So
Of
I just want to
course,
throw
yeah.
that one out there too.
And how do you define QM?
I'm sorry, QM means qualified mortgage.
Hmm.
So conventional FHA, VA, those types of loans are qualified mortgages. A non-QM, or back in the day, we also called them non-conforming.
Hmm.
Non-conforming mortgages. They don't follow Fannie Mae and Freddie Mac guidelines,
Hmm.
and with that type of loan, there's a couple points on it, and they're going to be higher rates. They're going to be, like
Hmm.
right now they would be in the sevens, maybe possibly 8, depending on credit score. But
Hmm.
sometimes it's worth it if you can, be able to get the money to purchase the home you want.
Of course. And I mean, I've said it a couple of times. I'll send people a real estate deal in our group chat, and I'll say, hey, this is a really good thing. If I could get the financing, I would be buying it. I actually just found a Columbus property. I was like, this would kill it on Airbnb. I just don't have the money. So, of course, it's always nice to have products out there like that. And of course, conversations like this help educate people. So we've done a lot of talking. So my final question is, for everybody that's on this chat that has yet to own their first investment property, you get to see a lot of mortgages, you get to see a lot of investors. What tips do you have for somebody that is just starting, that is just now looking at their first deals, is just now beginning their real estate investment journey? What tips do you have?
Well, pay your bills on time so that your credit score is good. That's the first tip.
Be
um,
financially responsible. Yeah.
Yes, yes, yes. Save some money. Keep some money saved. Whenever you have, and I should have mentioned this earlier also, when you have investment properties, you have to have a certain amount of reserves also for each property. So just, you want to have some money in the bank or in an investment account where we can count that as reserves. But for your money to put down, you definitely want to save some money, pay your bills on time, and I'd say those would be the biggest tips.
Of course, yeah. Well, hey, thank you so much for your time. I hope this was not a super intimidating conversation. So, like I said, this is going to be put on YouTube, and hopefully, this can help some people. And I just want to thank you for your insight.
Well, thank you so much. Thank you for having me and for trusting me with 2 of your mortgages so far. And I look
Of
forward to
course,
doing the next ones.
of course, yeah. Well, hey, thank you so much, and have a great day.